Ladies and gentlemen, welcome back to TNP Finance, where you make long and short-term investing simple. Today we're going to take a look at the NASDAQ, and not just the NASDAQ as the index itself, but also at the other Mag 7 stocks surrounding the index. So without further ado, let's hop straight into it. Right now on the day, we are currently down 0.34%, and then yesterday we were also down 0.65%. We did get a bit of a hawkish Powell. Yesterday was FOMC, and it wasn't anything significant. There was no cuts being made or anything like that. But Powell did end up admitting that he believes that the market is a bit overvalued. I believe he used the term moderately overvalued. That being said, the market did not like that as soon as he said it, and they started selling off just because there was a fear, or there is fear that, we're in a bubble, whatever, just because we've been moving up so fast within the NASDAQ. Let's just take a look at where we were back in April. And we have moved up over 50% within, I want to say, a few months here. What, 1, 2, 3, 4, 5, 6 months. Less than 6 months, we moved over 50%. So it's understandable when people say that, we are overvalued. However, of course, there are stocks that are very, very overvalued, like Palantir. But the market does provide a lot of, and the stocks within the market provide a lot of value. And these are stocks that are very exclusive as well. I mean, they're exclusive to what they do in their field. For example, you don't have giants aside from AMD and NVIDIA making very technologically advanced chips. You don't have a social media conglomerate like Meta, who is doing what they do. You don't really have a North American electric car market, unlike Tesla. And of course, Tesla is one of the weaker stocks, or the weaker companies as of right now when it comes to their sales in the EV market. However, they are all very specific and very exclusive to what they do. So that being said, I don't think that we are in a bubble. I don't think it's going to pop and we're going to see like an 80% drop like what we saw back in 2000. However, I do believe that in the future we could potentially see a correction. But as of now, we are still all technically bullish. There's no reason for us to be selling any stock or anything like that. But right now on the NASDAQ here, we saw the reaction of Powell's hawkish news. But then right as we got to the support level here, we started to reject. So you can see the bulls starting to come in. If I just take a look at the 15-minute time frame, what I can see is that we touched support, and now we're just looking to move a little bit higher, a little bit higher. So that being said, there are some trades that you could be placing. One that I could be looking for right now is looking to have a trade where I'm placing my trade right here, having my stop loss right at the swing low over here, and then taking profit right before our resistance line at about 24,750. And that could be a great risk reward of, again, 4.2, about 1% to the upside. That's what I'm looking for now. I think that's the most probable scenario. Again, we are in an overall bull market. There's no overly bearish news that's really gonna have lasting effects. It's just a quick little comment about what Powell said, and then the market is starting to recover again. But again, we will take a deeper look into all these stocks and see how all these different little puzzle pieces create a bigger picture. Over on the NASDAQ at 9:30, we placed this trade that looked exactly like this, taking your stop loss to the swing high. What I saw was that when the market typically gets this rounding top, when we're about to open into the market, I normally see a nice flush down in a nice bearish day. So pretty much like a turtle soup kind of thing. We got a great risk reward of about 3.3. We took profit at 24,500. Risk reward of 3.28, as I said, and then after our leverage, we made about 4.77%. So great day to be made. We're currently beating the NASDAQ by about 251% in the Discord, and all the trades that I personally take, and only the trades I take, are made public in real time to the members there. So if you're interested in getting all the trades I currently take, come take a look at that link in my description, wap.com/tnp-finance. You'll also get things like having access to ask me any question, and you'll also get free one-on-one sessions. So if that's something that interests you, if you're looking to become profitable or take your trading game to the next level, you already know what to do. So without further ado, actually, let's just take a look at what we're looking for a bearish scenario. So if we do look to break this rising support level that we're at right here, this is a pretty aggressive support level, especially considering how high we are in the NASDAQ right now. You could be taking a little trade here where you can have your stop loss or your trade placed when we break down below this level here. Have your stop loss at, let's say, the high of that day, and then take profit all the way down at 23,970. And if you want to wait for even more confirmation and you want to see a very big bearish pullback, you're waiting for a break of this level over here, 22,962. that is going to be where all hell breaks loose, and then we will definitely come and get a nice flush all the way down to about 22,100, which is previous all-time highs. But that's my outlook for the NASDAQ right now. I do believe that in the future, I do believe that next year will be a bit of a bearish year. But right now, I think for 2025, we are still in a bull year. We will close, I believe, above our previous all-time highs, but we might just get a little bit of a correction sometime soon, maybe within the next couple weeks. But let's take a look at those individual stocks when it comes to the NASDAQ. I want to take a look at Amazon. This is the weakest of the link right here. Very, very low PE ratio compared to all the other Mag 7 stocks. And what we can see here, we had previous all-time highs at $240 a share pretty much, $239 for Amazon. And we not only got a very, very weak rejection from this level over here, we had a false all-time high, and then we just started flushing down. We were very close to getting another breakout and new all-time highs. However, we didn't have enough bullish momentum, and we ended up crashing down. And right now for Amazon, it's not looking too good. I'm not gonna lie, it's not looking too good. Why? You have Amazon that rejected from a very significant level, and this is very telling if we're going higher or lower. Very strong rejection here. And then you also have a lot of momentum that is confirming that we don't have enough bulls, that the bears are in control. Why? You have a break below this lower Bollinger Band line, and then you have another break of this Bollinger Band line. If price action was smart today, the bulls would have said, okay, let's exit out and let's start moving higher. But they said, no, this is the right way. So you can easily come to the next support level here at $217 a share. And if we don't hold that, I could look to come all the way back down to about $201 a share. That could be a good place to be buying a swing position, where you could be looking for a rejection at this level where we can come down here, place your position, and then at least come back up to about $218 a share. And then from here, it's just there's no telling if we break above and continue moving higher, or if we break below and even move even lower than $200 a share. But that is my outlook for Amazon. Let's take a look at Google over here. And Google, I've been telling everybody, don't get your hopes up too high, because right now Google is in a very vulnerable position. And why is that? Well, if we just take a look here, we have a massive breakaway gap here. This is 4.5% on the chart here. And that being said, this gap will most likely get refilled. I want to say there's a 90% chance that we will get a refill of this gap, or at least come into this gap at some point. But we have gapped up very strong from there. And even our support line that we just broke out of, it's been even stronger than our previous support line that's been holding up Google for the past few months. So that is a very bearish sign, in the sense that it's very fragile. And right now, if we take a look at the 1-day time frame here, we can see that we have gotten a break below resistance line over here, and a break below our support line that is rising over here. So I thought that was very bearish. We are also out of the upper Bollinger Band. And right now, I think that Google can look to come back all the way down to at least 242. If you're looking to be super bearish, I think that eventually in the future we will come down to 215, but I think right now 242 could be a very good take profit. And this was another trade that the Discord was alerted for, and we're currently up over 1.8% on the chart. After our leverage, we're currently up about, I want to say about 5.4%. And there's still a whole lot of room to be moved down to the south side. So that is my outlook for Google. It's looking a little bit bearish within the short term. Let's take a look at Tesla over here. And Tesla is showing a lot of strength. I love to see this huge breakaway here. It is leaving a lot of vulnerable gaps that Tesla obviously will come and fill in the future. Tesla is not a exponential moving stock. It's very, very choppy. So I think in the future, once you hear about how, I don't know, Elon Musk doesn't like, I don't know, cats or something, or some stupid news that has absolutely no correlation to Tesla, you're going to see the market just start to dump, and then you'll get all those gap refills. So if you're looking to buy for the long term right now, now is a very poor time to do so. But if you're looking for a swing trade, I don't think that's a bad idea. Looking to at least come up to $500, which is a psychological level, and it's also pretty much a new all-time high. I think that is a very safe trade there. You can have your stop loss right at the low of the previous day, not just today, but the previous day below that. That's giving you a risk reward of 2.88, nearly 3, with 12.5% to the upside. So that is what I'm looking for when it comes to Tesla. If we can hold this level and we end up breaking below $414 a share, then you're looking to short the market, where we can have our stop loss right over that support/resistance zone, and then you can take profit all the way back down, either at a retest of this rising support, or either at this linear support over here. But regardless, Tesla has been one stock that we've been going insane with. I think we were 5 for 5 with our trades here. 1, 2, 3, 4, 5. We're currently up on Tesla like 180%. It's something ridiculous. So again, if you want to get all the trades I take, you already know what to do. Link in my description. Let's take a look at one other stock here. I want to take a look at Broadcom. This has been probably, I want to say, arguably the strongest stock I've seen in the NASDAQ within the past year for sure. It's the same thing with Google. You do have a pretty substantial breakaway gap over here, and if we just measure it out, this is the gap here. We're currently about 4.6% away from our previous all-time high. I think this level 317 will definitely get refilled, especially considering all this bearish activity. And then, yeah, that's pretty much it. Now, does it have to happen now? No, there is a chance that we do get a breakout of this resistance zone, and that could be a very good buying opportunity there. But right now, it looks like we are at a bit of support. So I either want to see a hold and a rejection from the support level here, where you could be placing a long position, something like this, taking profit where you have a lot of volume, stop loss right underneath that support level there. Great risk reward for 3.17. And if you're looking for a short position, you're looking for a break of that level, you are looking for your take profit at the gap fill, and then your stop loss at something like a height of a previous high of a candle. And that will be not the best risk reward, but that will be the fastest way to cash out for a trade. So that's what I'm going to be looking out for when it comes to Broadcom. But right now it is very, very strong and it's at a very high valuation. And I think that potentially, if we just take a look at the RSI, I think Broadcom could come down to at least the previous all-time high, as I mentioned here. Let's just take a look at that RSI over here. And we did get that bearish crossover. Yeah, so that's what I'm looking for when it comes to Broadcom. Let's take a look at the last one here. Everybody's favorite. This is 2024's favorite, NVIDIA. NVIDIA, what are we looking for here? This is a very, very weak chart from what I'm seeing in the short term here. Reason being is because we have a very key zone over here with a lot of resistance sitting at 183.50 a share. Not only did we get a false breakout, you got a massive dump after, and that's always a really bad sign. And we can just see that apparent with a stock like Amazon as well, right? Fake breakout, massive dump, and then even here, you know, tried to get up above that previous all-time high and got massively rejected. So I think the same thing could be seen for NVIDIA. That being said, how low are we looking to go? Well, right now we're kind of in this in-between gray area. So you're just waiting for more confirmation. And as a trader, that's okay. Take your time, be patient, wait for confirmation to show. And right now what you're looking for, bullish scenario, super, super simple. You have your position being placed while we're above this line here. Stop loss right underneath a swing low, something like 179 or 180, which is a nice psychological level, could be used for your stop loss. And you can take profits somewhere at about $197 a share, right below that $200 level that is also a psychological number. If you're looking to short NVIDIA even further, I would say waiting for a break of this potential support line could be key, where you could be waiting for the market to come back to either retest the zone and then look to dump. You could short the market from right here, and that'd give you a very good risk reward ratio, a better risk reward ratio than the bullish scenario. However, not so much percentage to be made there. But that's my outlook when it comes to the NASDAQ. Overall, it is, I'm going to say in the next couple months, it's going to be pretty mixed. However, I think in the short term, we still have a bit of some juice left in this battery for the NASDAQ, and we can continue pushing higher. So that is my outlook for the NASDAQ. And anyways, thank you very much for tuning in. And if you are interested again in getting all these trades we're taking and learning how to crush the market, come take a look at that link in my description. But thanks for tuning in, and I'll see you tomorrow. Later, y'all.